Hi everyone. Today let's talk about earnings so far, as well as the Twitter rebranding and the economic calendar. Then we'll get into the charts, as well as my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Looking at earnings, so far they have actually been pretty good. We've been talking about it for a while. Microsoft struggled a little bit, Tesla struggled as well. But everybody else has been doing pretty good in the major caps. Oil struggled, but didn't have a huge effect on the markets. And you can see over the last week, we had pretty good returns. Obviously had that big negative day, which dipped into negative territory from multiple indices during that period and then rallied right back into the highs there. A little bit of a whipsaw, but definitely interesting. They also point out some of the big hitters like General Electric doing very well. Taiwan Semiconductor and Intel also outperforming expectations. Google did well. Meta also did well. We still have a couple more to go. We have Amazon and Apple, which will definitely affect the markets. But so far, all the heavy hitters except for Microsoft and Tesla have done fairly well, and even with their earnings, they were okay, but didn't blow out expectations. Moving over to Twitter's rebranding, they have officially changed their logo to X. It seems like Elon really wants to make Twitter an everything app in terms of social media, so it seems like they're kind of going after everybody and trying to expand the Twitter footprint. I think Twitter is really best in brand for what they do already in terms of open forum discussion, but it seems like they're trying to turn it into a more everything app. They definitely are competing with YouTube in terms of putting long form podcasts on the platform now. They're also paying influencers with a lot of engagement and followers, so they're starting to share in the ad revenue, and it seems like they're kind of going after everyone's footprint in terms of social media at least a little bit. In terms of the rebranding, definitely kind of interesting. I don't know if X is the best move or how they're going to go forward with X. Overall, it doesn't really bother me at all. I still like the platform and I continue to post on there. Definitely follow the link in the description if you want to follow me on X or Twitter or whatever you want to call it. And I do post links to my videos there as well. Moving over to the economic calendar for Monday, we have CPI for the Eurozone. Looking at Tuesday, we have ISN Manufacturing, ISN PMI, as well as the JOLTS report on Tuesday. Wednesday, not much. ADP non-farms. That had a pretty large effect last time and it continues to blow out, which is interesting. You also have global composite PMI on Thursday, as well as Fed balance sheet and initial jobless claims. And then as expected, we have regular non-farms here on Friday, as well as private non-farms and the unemployment rate expected to be flat. So big unemployment numbers this week, and that could absolutely push the markets around at least a little bit. Moving over to the earnings calendar, we have Sony for Monday. Not much else on that day. Looking at Tuesday, we have Merck & Co., Toyota, Pfizer, AMD, definitely an interesting one, Caterpillar, Starbucks. Couple of pretty medium hitters on Tuesday. Wednesday, looking at Qualcomm, CVS, Shopify, PayPal, could be an interesting one. Ferrari, if you like cars, always fun to watch. And then moving on to Thursday, that's the heavy hitter for this week. We have Apple and Amazon after hours on Thursday. Also have ConocoPhillips, Anheuser-Busch could be interesting. They've been going through some things here recently. And then looking at Friday, not much of anything here, just Dominion Energy, fairly interesting. And that'll wrap up this week for earnings. Moving over to max pain for the week, not very many options. 740,000, put call ratio at 1.9. Look at all these puts in the market, tons and tons of puts, very few calls. People still bearish on the markets despite the rallies. Highest call strike up here at 490. Pretty high call strike, pretty far out of the money. Haven't seen that here recently. But these call strikes right next to the money are very weak in comparison to the amount of puts that we're seeing here. Remember, it's not a ton of options, only 700,000 right now. But with these many puts and these few calls, you have to expect that we're going to see at least a little bit of a rally, potentially pushing up into that 461, 462 zone. We'll see how this adjusts throughout the week, but right now this looks pretty bullish to me. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see we're in overbought conditions now. Momentum still bullish and everything still looks okay on the weekly chart. We're getting into these April highs, the area that we rejected from before we had a very significant move down over the subsequent 6 or 7 weeks or so. So definitely an interesting level. Could be an area of rejection. Overbought conditions on the weekly chart does not happen very often. You can see the last time we got oversold conditions was in May of 22. And then we got it again here in June of 22. Both times we had a significant move back into the middle of the range. And then we ultimately made a lower low, but a higher low on RSI, giving us the indicator that this was going to be a substantial move higher. And sure enough, we have gotten that substantial move higher. We are now hitting overbought conditions on the S&Ps, and now we'll have to see what happens next. Moving over to the daily chart, you can see that big down candle that we had on Thursday, giving us that bearish momentum. We ended up snapping higher on PCE data, hitting that resistance at 457.57, so still at an area of resistance. You can see this momentum on this move is definitely fading. Been watching this as a rising triangle for a while now. And you can see we've actually been stuck in this range for about a week. And if we don't see any significant breakout or establishing some higher highs that can hold, then you have to assume that we're going to see a more significant pullback, potentially all the way down to the 55 EMA, which is currently sitting at 433.97. Moving over to the NASDAQ here on the weekly chart, you can see very similar thesis. We've been overbought here for a long time on the NASDAQ. Momentum still bullish, but starting to fade a little bit more each week, it seems like. We are at this trend. It's kind of hard to call it a trend. It's more like a center line on this rally. We are above these April highs, and we're at the low from this consolidation at all-time highs. If this pushes up to all-time highs, up around 16,500, you have to assume that we're going to get some kind of rejection. This rally has just been basically straight up all the way from December of last year without any major pullbacks. And at some point it is going to pull back, and I think it's going to be pretty dramatic. Moving over to the daily chart, you can see we've been consolidating in this zone. I added a couple of levels here as well that are worth watching, 381.54 and 378.79, because we've been consolidating here for a while, and I think you have to trade this like a range, starting to sell the highs and buy the lows until we see a break from this range. We just haven't seen that yet. 384.16 being a clear level of resistance, and 376.45 being a clear level of support. Moving over to the Russell here on the weekly chart, you can see we are at clear resistance. This is a longer term major trend line, marked the top going back to January of 20 as well, and the top here in May and June of 22. Clearly an important level. Momentum and RSI are still bullish, could absolutely push through this level. We tested it once here in January. Now we're back in this zone, testing that 144 EMA here on the weekly, sitting at 2001. We'll see how that plays out. If this breaks, then the next level is up around 2118, and that's up around the highs going back to March of 22 and the lows from this longer consolidative period that we had from March all the way until December in 2021. Moving over to the Russell daily chart, you can see we've had this consolidation here, which is interesting. And zooming in on that a little bit, we've been flat for quite a few days now. Took out the lows on that big wick down before we gapped up on the PCI data. Momentum basically zero. RSI still positive, but this looks much more like a consolidation now, especially compared to this previous consolidation before we saw a more significant pullback, setting up a base and then had a stronger rally off that level. At this point, I would expect something like that, potentially a pullback down to 190, 191. Doesn't mean that it's going to last very long or that we're not going to go higher ultimately, but right now you have to look at this as a consolidation, potentially looking for mean reversion. Moving over to the Dow on the weekly chart, you can see this colossal breakout over this previous high. We're right at the highs now from April of 22, testing the highs from August of 21 as well. If those levels break, then you have to assume that we're going to test these all-time highs up around 365. Absolutely could happen. Momentum bullish, RSI still bullish, and it does look like this is going to continue into the next week. Pretty much all the weekly charts still look pretty bullish, but we're starting to see some weakness on the shorter time frames. Moving over to the daily chart, you can see that same kind of consolidation, big red bar, still a little bit more bullish than the Russell. The Russell was clearly sideways. The Dow drifting up a little bit, but still sideways. Momentum fading here slightly as well. Like I said before, that big red bar definitely makes me a little bit nervous. Might be seeing a little bit more mean reversion. If we did see a pullback down to 346, that could be interesting. Momentum definitely indicating that we could see a move like that, similar to what we had here in June, where we pulled back to the 21 EMA and then rallied off of that level. Certainly could happen. Wait for those EMAs to catch up a little bit and then go higher. But either way here, everything is still a very bullish structure. We're above all of the EMAs and SMAs on the daily chart. Moving over to my indicators here, starting off with copper versus gold, you can see still going sideways. Big down move last week. Big down move 2 weeks ago, threw a big wick to the upside this week. Definitely consolidating, getting held down by that 21 EMA. Momentum is bullish and RSI is showing some strength, but we're just not seeing the price action on the follow through. If VWAP holds down at 1927, that could be interesting, and then we see a continuation to the upside that could reinforce a potential up move. But right now we're not seeing it. Moving over to the equal weighted S&Ps, you can see we got a doji on the week. Definitely interesting, right at these previous highs. Clearly a level of resistance. And if we jump in on that, you can see it is very similar to the Dow. It's been drifting up, had that big red bar after hitting my level, and then we've kind of consolidated, had an inside candle. Still watching this as a rising wedge, and if this breaks down, I would definitely be looking for a mean reversion, if not something even a little stronger. And you can see that momentum is turning bearish, RSI breaking below the SMA, clear divergence from the previous highs, and it definitely looks weaker going into the next week on the shorter time frames. Moving over to the ratios, starting off with the NASDAQ SPY and the SPY Russell. You can see the NASDAQ SPY actually rallied a little bit. The NASDAQ outperformed the SPY a little bit. SPY Russell, on the other hand, definitely rolling over, still at a level of support, so it could hold here, but you can see the 21 and 9 EMAs are starting to roll over, momentum bearish, RSI bearish, and we're starting to see that Russell outperformance that I've been talking about, and that continues to be and I continue to believe that's going to be the case going forward into the next few weeks at least. Moving over to the SPY divided by the M2 money supply, I continue to talk about this chart. I think it is super important and we are definitely at a critical level. You can see the pre-COVID high, the all-time high, and then our current level here. The M2 money supply has continued to contract and the markets have continued to go higher. So based on this ratio, we are at the same level that we saw at the November and December high from 2021 before we saw that significant pullback, and the same level before we saw that COVID move down. It does seem very interesting that we're at this level. I also want to zoom out here just for a moment. You can see we have not maintained price action above this level ever. We had the .com levels here where we broke out from here in 1997, eventually pulled back to this level in 2001. Doesn't mean that you can't have an absolutely massive rally above this level, but understanding from the investor's perspective, this typically pulls back into these lower ranges based on the M2 money supply, and this is absolutely something that you should continue to watch on a regular basis. Moving over to Apple and Tesla, you can see Apple here having another solid bullish week. It's a new high for the weekly close, but we did not take out the wick high from 2 weeks ago. We're still chopping in this zone, still bullish, and we did close above that level, so you do have to pay attention to that. Weekly resistance, in my opinion, sitting up around that 202 to 204 area. Overall, still good, momentum fading, RSI, definitely some divergence there, but the trend is still intact. Tesla, on the other hand, showing much more weakness. Came up just short of my price target, up at 302, and then they had their earnings announcement, and that was not great. You can see they're retesting 264.68 right now, and if it breaks down from that level, I would expect to move back down to the 332 area, and potentially retesting that VWAP sitting in that same area. Momentum weaker, momentum moving down, RSI also moving down. Moving over to NVDA and Amazon, you can see NVIDIA has been chopping in the zone. We had a new all-time high close on the weekly chart. Momentum fading, RSI super overbought, but this has been one of the strongest stocks, and it continues to look pretty strong here on the trend. Amazon, we have their earnings this week. We talked about it, and it looks a little bit weaker coming off of that 200-week moving average. Tested it, had the big rejection candle. Tested the 9-week moving average, ended up closing basically in the middle of the last week's candle. Momentum fading, RSI also showing more weakness. Volume was pretty weak last week, definitely more volume on that big down move. And this is a critical area going into their earnings. If they get good earnings, we could absolutely push through these two levels and look for a price target up around these previous highs from August of 22, which would give you about $10 to $15 of upside from current levels. Moving over to staples and discretionary. Staples rallying, continuing to look more bullish. Took out that level, continuing to look strong. Discretionary, finding resistance at 174.76. Threw a big wick to those trend lines. Also looked like a rising wedge, and we'd been talking about it. Tesla earnings not doing great for it. Momentum starting to pull back. RSI looking very similar to some of the other weaker stocks that we've seen coming into zones of resistance. Could still be looking for that one more big push up, final liquidity push on discretionaries. But in my opinion, we're definitely showing more weakness here than we have recently, similar to what we saw going back to February and March, which ended up being a pretty substantial pullback. Moving over to transports here on the weekly chart, you can see we're in this trend structure. We are right at the top of that trend now, and you could absolutely find some resistance here. Momentum still super bullish. RSI hit overbought conditions on the weekly chart finally. Right in this previous consolidation going back to November of 21. Did not hit these highs yet, and I could absolutely see a big wick into that zone before you see rejection and end up holding at this trend line. Definitely an area to be watching going into the next week. Moving over to breadth here on the 50 and 200-day averages, you can see the 50-day average showing clear rejection from that zone that I talked about, 92.25. It has marked multiple tops. We didn't quite get there, so we did come up a little bit short, topping out at 89.26. So maybe we see a little bit of a pullback, a continuation, we actually hit the level, and then we pull back. Certainly could happen. Or maybe we see something more like this, where we dip into a mid-range, pull back, and then get the bigger low. Certainly something to watch here. Clearly a big engulfing red candle on the 50-day average that you do have to respect. Moving over to the 200-day, you can see this is not as important of a level. Could absolutely push up to 91.42. Anytime we get into that zone, we typically have bigger pullbacks, and we're not there yet. We're at a level of resistance, marking the high from January. Certainly could hold in the zone for a bit, a couple of weeks before we see a bigger pullback. Or it could hold in the zone and then rally up, something like this, or in here, pushing up into that bigger, longer term level. Certainly possible, allowing for that pullback on the 50 and the continuation. Overall, not as bearish as the 50-day average. The 50-day average is definitely showing more weakness. Moving over to yields just for a moment here on the daily chart, you can see we had a big push up on Thursday on yields, getting above that 395 level. We did reject from that zone, but still looks pretty bullish. Momentum still bullish. RSI above the 50 line. 2-year yield still holding in this zone. If it gets above 5 to 5.1, that could be interesting. We got into that same zone in March of 23, and it does seem to be drifting higher slowly. 10-year yield has been higher than it is right now, but the only time it was higher was in October when we were experiencing our most recent lows. And if we did start to push into that zone, that could be quite a bearish development here on yields. Moving over to the dollar, I just want to reiterate what I said on the Friday video. We talked about this pulling back to that 4-hour 55 EMA, found support there and then rallied. Still looking a little bit stronger, and if the dollar continues to remain strong, that could push yields lower. We did get a doji on the last candle of the week. Momentum still bullish. RSI holding above that 50 line, so this could absolutely continue here, but we're at an area of resistance. You can see marking these lows here from June of 23. And if we get a rejection, we could see this ultimately push back into these lows, which is what I'm looking for down in that 98 area. Moving over to JNK and TLT here on the weekly chart, you can see JNK had a doji on the week, momentum still bullish, RSI still slightly bullish, and we're above all the EMAs and SMAs. This could continue to rally here. It does look pretty good in my opinion. Have a nice base, holding that 91 zone. You can see this double bottom at a higher low from the low in March. Overall, looking not bad. TLT, on the other hand, looking super bearish, below all of the EMAs and SMAs, bearish momentum, and that makes sense considering the yields look like they're set to go a little bit higher over the next week or two. Moving over to the VIX and the MOVE index, VIX doing not much of anything, throwing wicks to this level, still holding in the zone. It could absolutely hold here for a very long time, not showing us much information at all. Did hit that 1490 just for a moment on the daily chart, and then clearly rejected, still holding in that zone. Move index also holding in this same zone that it's been in for a while. Not much of anything. I would expect this to spike up a little bit if TLT continues to fall, but overall volatility not doing much of anything. Moving over to my accounts, I did get chopped up this week, unfortunately. I've been playing this most recent price action like trend, and it's really a consolidation at this point, starting to look to buy the lows and sell the highs versus buying the highs looking for continuations. We've seen consolidation, we're showing resistance, and you have to start to trade it that way. The Russell continues to show a little bit more strength, at least on the charts. The NASDAQ looks more like a whipsaw to me. We'll see how this continues to play out, but right now I'm going to start to look to trade this more like a consolidation and looking for those range-bound style trades. Overall, still bullish on the IWM, still neutral on the Qs. Let me know down in the comments section what you think of earnings season so far, or what you think of the Twitter rebrand, moving over to X, and trying to consume the entire social media market. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.